Friday, June 5th, the end of the week. It's almost 8:30 p.m. Eastern Time, 1:30 in the morning in London. The market from the 143.38, which was also last September's high level, and it was necessary to get above that and close above that level for continuation, found that it was being dragged lower, possibly by the British pound. And it came close yesterday to the 200-day moving average. That's the yellow line. So let me explain what these moving averages are. The blue is 10, the green is 20, the red is 50, the lighter red is slightly different. It's an 89 EMA, which will give you something close to a smoothed 50 average. The pink is 100 and the yellow is 200. Occasionally I do place other moving averages on the charts. Now, as you can see, I like to use bar charts rather than a candlestick. Many people love to use candlesticks. We can change this into a candlestick. Here you go, here's a candlestick for those who are, how shall I put it, challenged when it comes to artistic nature of drawing charts. But a bar chart actually gives you the exact same information. Here on a candlestick you have the open, the high, the low, and the close. If it's red and if it's green, you have the open at the bottom of the green. If we look at a bar chart, we have the exact same information. The little bar to the left is the open, the little bar to the right is the close. But as I say, some people like to see the pretty colors of the candlestick. It makes no odds, whatever you're used to. So here what happened today was that the market was consolidating in a very narrow range. You knew that when you had this sort of narrow range here, that it was going to break out. This is an hourly chart, don't forget. Non-farm payroll comes, they sell down for a second, and they immediately jerk it straight back up. Now let's have a look at this. This looks pretty impressive in the hourly chart. Let's take it down to, what should we go down to, 5 minutes? So there it was. For 5 minutes it went up. It then had a balancing bar, and once it got underneath that low of the balancing bar, it was down and dirty for the rest of the day. Lower highs, lower lows. One attempt at consolidation during the course of the day, and a second attempt very late in the day. Let's go to a 15-minute chart. So on the 15-minute chart, once you got the reversal, there never was anything. You had one little entry here with a stop out, and that's about it. So patience is the name of the game sometimes. Let's go out to the 60 minutes. I'm going to take off these indicators underneath because really they're not really telling us anything except that the ADX is telling us the market is still trending. So we can see it in all of its glory. Let's go out to a 240-minute chart and see really what happened. So on the 240-minute chart, this move down here came to a 100-period moving average, closed above it, and you had the retracement. How much of a retracement? It was about a 70% retracement in total. A little bit more than you would normally imagine. But this is where the price action to the news is more important than anything else. And clearly there was a reject, and the market came down and closed at the 100-period moving average. I believe I actually said this was the 100-period moving average earlier. That's the 50-period moving average. So on the 4-hour chart, we went down to a 50-period moving average, almost the 200 period on the hourly. So now let's take a look and see what we can imagine would happen. Clearly, the support is going to be somewhere down here at 137. And interestingly enough, when I look at pivots, then I find that 140.54 is the daily pivot for Monday, and the S2 is 137.18, so pretty close to this 200 period. So you would imagine that first test down here, you should get quite a reasonable bounce. Let's as well just go back and see how much of a bounce we could get. In terms of a little rally. And you'll notice that the 38% retracement is 140.60, pretty close to that 140.54, and really very close to what was the capitulation trade. So perhaps for Monday we could imagine something like 140.60 to 137.20 as a trading range. Certainly if one buys it closer to 137, you're going to have a better opportunity at managing the risk than anybody who bought it today. I just leave that with you as a thought process. Australia is closed on Monday, and not an awful lot of data is out. And so the chances are that Monday is going to be another stop hunt. And the stop hunt in terms of the path of least resistance right now, you would imagine, because of these lower highs and lower lows, should be to make further lows. Looking at a daily chart, we see that from the low it's a clear three-wave pattern. The breakup was 137.37. If we go to the monthly chart, we're starting to get some form of reversal pattern. Going back to the weekly chart, the one thing which stands out is the 200 period, the yellow line, and the pink 100 period. So 200 week and the 100 week moving average are pretty flat. And there's a reasonable chance, therefore, that we're going to trade up and down and round about for a period of time. And so in that respect, having failed to capitalize on the 143.35 to 40 area, the support is going to be on the 20-week moving average, which is at 132.43.